For our next session, it is my great pleasure to introduce a visionary leader in the hospitality industry, the Chief Executive Officer, Europe, Middle East, Asia, and Africa of IHG Hotels and Resorts, Mr. Kenneth Macpherson. Mr. Macpherson is responsible for a region that spans more than 70 countries and represents more than 1,200 hotels operating under 12 IHG brands. Prior to his current role, he was the CEO of Greater China for IHG, where he was responsible for the management, growth, and profitability of the company's fastest growing region. In conversation with Mr. Macpherson, we have Mr. Achin Khanna, Managing Partner, Strategic Advisory, Hotelivate. Achin heads the firm's strategic advisory practice, where his experience in consulting field ranges from feasibility analysis to strategic consulting, both in India and internationally. Please give them a round of applause.
Thank you. Before we begin, the lights, if you can help with that, Megha. Thank you. Good afternoon, ladies and gentlemen, and hope you're having a good first day. Kenneth, we should jump right into it. We have a very short 20 minutes with us, and I'd like to make the most of it for the sake of the audience. May I please request you to maybe take no more than a minute? Quick introduction, yourselves, your background, the markets you cover.
Okay, brilliant. Thanks very much. I might say congratulations on 20 years of the event.
Thank you.
A great milestone. So my role on the IHG Global Executive Committee, responsible for Europe, the Middle East, Asia, and Africa, having previously run the Greater China operation for 5 years, and I've done this role for now my 8th. In that role, responsible for growing it, for delivering a fantastic performance for our owners, and of course delighting our guests on every occasion, and really our reputation as well across the business. So it's got an all-encompassing responsibility, working with other colleagues on that global exec. So.
Thank you. And if I may jump right to the region that's relevant here, South Asia or the Southwest Asia region at large. I guess the question, Kenneth, is given the recent bull run that this part of the world has seen in terms of hotel performances, what are your views on the short to medium term outlook for the hospitality sector here?
Thank you. My view is that we shouldn't think about this as a bull run. It's been very strong performance. It's going to continue. For me, it's the fundamentals that are driving it. The GDP growth, India now, moving up towards the world's third largest economy. It's the middle class growth that goes with that. But that is converting to the role that travel and tourism is playing in the economy. I think it was $253 billion last year. The projections for that are significant, particularly with the government saying, let's take it from 5% of GDP to 10% of GDP. And the policies that then drive infrastructure, tourism destinations, really bring all that together. The role is a very, very exciting one for the market. I think it's going to continue. That is why, for us, it's a very significant global priority.
Thank you. Kenneth, while IHG has made great success with some of your new age and lifestyle brands, if I can call them that, in markets like larger Europe, Middle East, even Southeast Asia, specific to this region, would love to get your views on some of your relatively newer brands, such as the Kimpton, the Indigo Hotels, Woco, the Vignette Collection, even Garner. Thoughts on the South Asia and the Southwest Asia markets as far as these brands are concerned?
Yeah. Currently we've only got 6 of our brands present in the region, and with the Garner announcement, that moves it to 7. So with a portfolio of 20, we have plenty of opportunity. But the reason I'm confident would maybe to take an example of our Voco brand. So the Voco brand, which was launched not that long ago, just before 2020, has been a roaring global success. I think it's one of the most successful premium brands that there is globally right now. And that brand, we've got 1 open already here in India at Jim Corbett. We've already got 5 more in the pipeline now. Voco, originally designed to work for converted assets and new build, really high returns for owners. The guest reviews and the satisfaction of that brand, the delight in the brand, very strong. And so you see the flexibility of a strongly branded, high returns premium asset. as being a great opportunity for the market here. We announced yesterday the signing of 2 Ghana's. That's the second newest brand in the IHG portfolio. The newest is actually Ruby, that we announced the acquisition of quite recently. Ghana, we've announced with a franchise model that's working with a third-party management company. Again, flexible, works very well for conversions, and I think that's going to tap into the scale opportunity at still a quality branded end of the market, but far more accessible price point. Finally, you mentioned Kimpton. Kimpton not yet in Southwest Asia. Kimpton, based on how it's performing in other markets, really strong. The thing about Kimpton is it's playing in luxury, and it is a brand that can just deliver lifestyle very purely. It can command the rate, and it's got a very effective operating model. So if you look at that and look at the young demographics, look at the growth of spending power in the Indian market, I really do think that brand's actually got a phenomenal future here. And of course, we'd be keen to bring it in. So that's 3 examples of 3 new brands. We're confident about the potential of those.
And on a related note, Regent, while not a new brand and sitting squarely in the luxury space, probably one of the stronger brands of all brands across portfolios. Years ago, there was a Regent in India, and that wasn't with the IHG platform. Do you see some opportunities for that in India at all?
I'm deep believer in the Regent brand. Now we, already understand the ultra luxury market in India because we've got our 2 Six Senses open here, Fort Barwara and Vanna, and so we can see and we really care for guests in that very high spending part of the market already. The Regent brand is going from great strength to strength. It now has global flagship halo assets. You've got the Regent Hong Kong, which is a fully refurbished Kowloon side asset, which is really an iconic hotel in Hong Kong. The Carlton Cannes, one of the most famous hotels in Europe, is a Regent hotel, again, following a substantial complete refurbishment. And we've got an exciting set of opened hotels like Phu Quoc and Bali. We've got Kyoto will be opening in the not too distant future, and we've got a really strong pipeline now in the Middle East, with Riyadh, with Jeddah, and with Mecca. And that brand that is that sort of next generation of top-end luxury, I believe, again, is going to fit very well into this market. So we have a superb luxury portfolio. They've segmented quite differently. I think the spending power is definitely here. So yes, I'm pretty optimistic.
Good to hear. You touched briefly on Six Senses, and let's maybe spend a couple of minutes on that. While I guess it's not news to anybody in the audience that Six Senses was never designed to be a scale brand, and you have 2 products in India already. 2-part question. One, should we hope to see more Six Senses coming up in India in the short to medium term? And 2, what should the developers and the investors in the audience here be mindful of when they want to partner with IHG for a prospective Six Senses in the future?
Yeah. So Six Senses is really by design is going to be a scarce brand. Each is going to be distinct. Each is going to serve upper ultra luxury, however you describe it, and do it brilliantly. We have 24 opened already. The pipeline is about the same on that. We are not looking with Six Senses to, as you say, to build a scale footprint on them. We are approached for lots of opportunities. We turn down the vast majority of all of those. We really would be looking for absolutely exclusive, stunning locations, capital that can deliver the asset properly, capital and financial power that can deliver an operation with us properly, and a real understanding that ultra luxury is something that is right 24 hours a day, 365 days a year, and that operation needs to drive it. So we're focused on delivering, the world's most famous upper luxury brand. I think it does that already in leisure, in sustainability and wellness, and we want to keep it positioned where everyone who goes to it can be confident of that.
Okay, thank you. Let's shift gears a bit and let's talk about your core brands, what IHG is best known for. So, I don't think it's news to many that you've met with great success with your core Holiday Inn and Holiday Inn Express brands in recent years in India. Crown Plaza has done well for itself also. However, InterContinental, your flagship brand, has had a relatively measured growth in India in recent years. What are your plans for Intercon's growth in South Asia and Southwest Asia?
Yeah, and thanks. I think that's a great question. I mean, I'm very lucky in my role. I have 120 opened intercontinentals I'm responsible for. I've got 60 in the pipeline across EMEA. Now that gives you a scale of the capital that is investing in that brand. What those numbers don't tell you is the capital that is being invested in the 120 open intercontinentals. And we are seeing really significant assets in multiple markets, having full significant refurbishments. So I look at the brand continues to go from strength to strength. In Southwest Asia, we've got 4 opened intercontinentals, but we have 10 in the pipeline. And in fact, we were very proud to announce the new project at Kausoli only a couple of days ago, which would be sort of beautiful, more leisure wedding driven asset. Absolutely stunning designs for that. So what I see is this constant investment in the existing assets. I see a new generation of assets that are coming to the market. I'm deeply confident in our ability to execute that brand. Pull all that together, I think the untapped potential for the world's largest luxury brand in Southwest Asia is huge. We're confident in it. We understand that there's a strong history here. We've got to build on that, and we're looking forward to doing that. So, but the brand's been here since the 1960s, and we intend to really honor that legacy.
Splendid. Let's talk a little bit about franchising. It's one of the buzzwords for the last 5 odd years in India now. And it's finally begun to find its feet in a meaningful way here, across brands and across geographies. Equally, there are some good quality white label or third party operators that are both growing here now, as well as coming in from other markets, Middle East, Southeast Asia, and so forth. So the 3-party model, if I can call it that, owner, operator, and flag or brand is finding its feet in India. What's the InterContinental Hotel Group's plan to capitalize on this franchising opportunity? And I peppered that with the fact that you spoke about Garner just a few minutes ago.
Yeah. So the 2 Garners that we announced are a third-party franchise model. So a bit of background is in the about 1,350 hotels that we have opened in EMEA. About 2/3 of those are franchised, and we have an incredible depth of experience of the various models in all types of markets, of where we've seen that work, where we've seen the challenges with that, where we've seen the opportunity to improve. That sits alongside our substantial franchised model in the US and also in Greater China, where we've got a significant one there as well. So the first part is that whether you're managed or franchised, whether you're owned or leased, the brand has to be the brand, and it's got to be delivered consistently. And equally, the financial returns and the performance of the asset has to be delivered consistently and equally. So our approach is that we recognize, and we're quite excited about the fact that we believe this model is going to develop. We think there is going to be more of that. There's plenty of opportunity for it. We're setting up the model to be right for the market, to support the needs of the market, to ensure that the brand and the performance are delivered consistently and to the standards that we need. And that structure, and of course we've got real depth of experience on that, we're confident is one that will move from the few signed deals now to many more going forward. But it will be grounded on reputation of performance and the trust that you can have in our operation.
If I could stick to the franchising topic for one more question, amongst the stable of brands that you present, are there brands that you will or won't be open to franchising in Southwest Asia?
Well, probably with what I've said about Six Senses, you would follow from that we're not going to be rushing to do that. The way we'd be thinking about that is at the very top end, right now, that's not what we want to do. By top, I mean by rate. All the brands are fantastic. And then towards lower rated hotels, going to be much more open to the model. But the hallmarks of it are working with the right partners who have got the capabilities to deliver. If we think there are gaps in capability, that our model is going to augment the capabilities to make sure that the hotels are successful, and to be really selective that when franchising happens, it happens with partners and asset owners that can make that model work. That is very different to just going, let's do tons of franchises, right? We don't want to do that. We don't think that's going to be good for trust in the market. We don't think that's good for the long-term development and trust that we need from guests and also investors in the asset class.
Fair enough. Ladies and gentlemen, Kenneth and I had the opportunity to chat for a bit backstage while we were waiting, and one of the things you said that intrigued me was your view on Southwest Asia on a graph and where it may be headed from here on. And I want to link that with your previous experience over several decades in working in growth markets, especially China comes to mind. Do you have parallels? While I know it's not a good thing always necessarily to draw parallels, but are there any to be drawn? And is India at a point where you'd like to share some thoughts about where we're headed?
Yeah, thank you. And as we talked about, you never get into comparing cultures or some of the local nuance, because each country is wonderful and special, and India is, no exception to that. For me, there are though a few fundamentals on high growth markets. The first one is to have the right team with the right set of beliefs and values. And that's something that wherever we have high growth markets, we focus strongly on that. If that isn't right, it's very difficult to build a really, really significant business. And alongside that then goes with making sure the foundations of the business are rock solid. Again, it is actually quite easy to drive short-term growth in high growth markets. It is far harder to drive high growth that is sustainable and delivers high performance. And so you want to make sure those foundations are absolutely solid. And that's why, we talk about it's reputation first. It is guest experience. It's the revenue performance. It's the profitability of the assets. That's core delivery second. And if we do that right, we're going to grow and we're going to accelerate our performance. So people, foundations, really focus on the core performance. And then, you've really got to enjoy the ride. And I absolutely, love the passion, the thrust, the thrill of high growth markets. We're seeing our business accelerate here significantly. And I don't know if Sudeep and the team you're here, but we've already so far publicly announced 10 new signed deals this year. The two Ghana we talked about the Intercon and Kalsoulia as well, but 7 more before those. We're seeing that acceleration, grounded though on right people, foundations, reputation, core performance, to then power the growth.
Thank you, Kenneth. We've got only a couple of minutes left. I didn't want to leave the stage without at least touching on this recent phenomenon of branded residences finding a lot of takers globally and equally importantly here domestically. There's a lot of interest in developing mixed-use projects with commercial, retail, hospitality, and a branded residences element. How does IHG look at this as an opportunity, perhaps, and what would you like to share with the audience vis-a-vis your organization's branded residences philosophy?
Yeah, great, thank you. Firstly, I think it's a great opportunity, and I think it will develop. Organizationally, we have recently appointed a new global head of residences. A very fortunate, very experienced leader, Jose, who reports to me and is part of the EMEA leadership team, responsible to develop this for the global business. I think it becomes really, really interesting in terms of the way that the residences can support great owner and investor economics, particularly where you've got very high cost, very prime located mixed use developments or just resi hotel developments. It's incredibly important that it's not just set up to be able to sell the brand, sell the dream, but the setup has got to be there to deliver the promise, to deliver the dream. And so it's as much about supporting developers in the residential sales and making sure that that value is created as it is about a clear brand promise and then the operational excellence to deliver against that. We're absolutely focused on that. We've got a strong development of our residential pipeline in many markets. It plays a key role in the luxury space, but also some of the other brands. And yeah, a really strong opportunity. So it's good. What I would say, it has to be done stably. And there are lots of learnings from lots of markets about the watch outs with resi. And if it's newly developing in the market here, it's a great opportunity to kind of develop it and get it right as it scales. And so we'll be very focused on that with anything we do here.
Splendid. And we've just run out of time. Perfect timing. It's been an absolute pleasure chatting with you. Thank you for your time, Kenneth. Thank you, audience.
Thank you for yours. Thank you all.